Hello guys, how are we doing today? Welcome back to this channel and welcome to this video. We are still on the Mind Over Market series and I want to believe that it has been going pretty well. I hope you have been following up on the series and I want to believe that it has been quite educative as promised. Now this is episode number 8 and we'll be talking about dealing with trading losses. You don't want to stop this video halfway. You don't want to go anywhere. You want to stay and watch this video till the end because we're going to be teaching you how to handle losses, how to bounce back from losses. You know, losses, like we've said in previous episodes, that losses is part of the game. Losses is inevitable and losses is part of trading. So how do you handle losses? How do you bounce back? How do you handle the emotions that's associated with losses? Trading in the forex market can be a thrilling and rewarding endeavor. However, every trader, regardless of their experience, will inevitably face losses at some point in their trading journey. It's important to understand that losses are an inherent part of trading and can provide valuable lessons that contribute to long-term success. In this video, we'll explore effective strategies for bouncing back from trading losses, turning setbacks into opportunities for growth, and ultimately becoming a more resilient and successful forex trader. So like we've said, losses is part of the game and you can't avoid losses. In fact, I've said this in a previous video, if any professional expert or guru that promises you 100% winning trades if you get either his course, subscribe for his signal, get his robot or anything, anybody who promises you that is a fraudster. The person just wants your money, wants you to buy his product. In this video, I'll be giving you 7 steps to dealing with trading losses. Are you ready? Now, number 1, acceptance and emotional resilience. Experiencing losses can make a range of emotions such as frustration, disappointment, or even self-doubt. It is crucial to acknowledge and accept these emotions while maintaining emotional resilience. Remember that losses are a normal part of trading and they do not define your abilities as a trader. Do I need to say that again? Losses are a part of trading and they do not define your abilities as a trader. Develop a positive mindset by focusing on learning from mistakes and viewing losses as opportunities for growth. So many traders, each time they have losing trades, they feel that it shows their incompetence. No, that's not the truth. In our last episode, we talked about long-term goals and short-term goals. So losses can happen in between, but if you're a profitable trader, it should not stop you from attaining your long-term goals as far as they are realistic and fit into the criteria which we did talk about in the last video. So accept losses as part of the game and build emotional resilience. No matter how losses makes you feel, no matter how much of your emotions are triggered, frustration, self-doubt, all of those are real, but ensure to maintain emotional resilience. Then number 2, analyzing and learning from mistakes. After a loss, it is essential to analyze your trading decisions objectively. Identify the factors that led to the loss and determine whether they were within your control or influenced by external circumstances. So after a trade goes against you, after you have a losing trade or maybe a losing day or losing week, go back and analyze your trade. Get to see what exactly were the causes of the loss. Was it a problem from you? Was it things you could have controlled or was it external factors? Maybe news, maybe unexpected events, maybe market structure changed, and all of these things. Get to understand what was the reason that led to the loss. Then you can be able to tell yourself what areas you need to make amends, or if you can now tell yourself that there's nothing and absolutely nothing you would have been able to do differently in order to mitigate that. So after analyzing your trades, that's to get to know why you made these losses, then you ask yourself this question: was it a result of poor risk management, lack of discipline, or failure to adapt to changing market conditions? By pinpointing the underlying causes, you can learn from your mistakes and avoid repeating them in the future. So after analyzing your mistakes and you get to know if it was your fault, then you'll be able to avoid them. You know how to avoid them and make sure they don't repeat themselves in the future. Then number 3, maintaining a trading journal. In a previous episode, we did talk about trading journal elaboratively. We explained what a trading journal is and why you need a trading journal. Keeping a detailed trading journal is a valuable tool for learning from losses. Document each trade, including the rationale behind your decisions, entry and exit points, risk management strategies, and emotions experienced during the trade. Reviewing your journal regularly allows you to identify patterns, strengths, and weaknesses in your trading approach. Over time, this practice will help refine your strategies and enhance your decision-making process. So having a trading journal, keeping a trading journal will help you refine your trading process, because from time to time, you'll fall back to these journals and you get to see the things you did right, the things you did wrong, and be able to make amends to the things you did wrong and try to repeat the things you did right.
So guys, we just launched a new Forex course, and it's a complete guide from beginners to advanced training. If you go through this course, I promise you, I can assure you that you'll be able to trade by yourself comfortably and profitably. It has over 30 videos. Let me scroll down for you to see. It has about 30 videos. You can see section 1. Okay, this section 1. And this section 2. You can see a good number of videos here. I think section 2 is quite a lot. Then we have section 3, 4, 5. In section 5 is where we have the ebooks. Let me open it. You can see that. You see the ebooks. Then you can also see my book, Trading Without Tears. It's also there. So we have all of these in the Forex course. And like I said, it's a complete guide from beginners to advanced. The course is to be selling for $200, but because we're just launching, you can see the strikeout price. It is currently selling for $135, which is 100,000 naira. So for the first 200 persons that will take advantage of this offer, that will purchase the course now, you'll have the course for 100,000 naira, which is equivalent of $135. So click on the link in the description of this video and get started with your journey towards trading profitably.
Then number 4, risk management and position sizing. Effective risk management is a cornerstone of successful trading. Ensure that you have a well-detailed risk management strategy in place before entering any trade. This includes setting appropriate stop-loss orders and determining position sizes based on your risk tolerance and account balance. By managing your risk effectively, you can limit potential losses and protect your trading capital during unfavorable market conditions. So risk management is very essential to control loss and mitigate loss. So each time you use proper risk management and the trade goes against you, you will not lose so much. In fact, or let's put it this way, you won't lose an amount so huge to ruin your countenance, to make you feel downcasted. So imagine losing maybe 0.5 or 0.5% of your portfolio. It won't alter your feelings. It won't alter your emotions. It won't make you feel terrible. No, not such can't happen. But if you're taking trades perhaps without stop loss and with huge lot size, not giving attention to proper risk management, you will always feel downcasted each time such trade goes against you. That is if you don't totally lose your account. You know, there's a difference between feeling downcasted because you lost a huge chunk of your capital and feeling totally lost, or how do I put it, totally frustrated because your whole money is gone and you have to start thinking of where to raise money and fund an account again and start trading. In fact, these actions has led to many people quitting forex trading totally. Then number 5, adaptability and market analysis. Forex markets are dynamic and subject to constant changes. Adapting to shifting market conditions is crucial for minimizing losses. Stay informed about economic indicators, global events, and technical analysis tools that can help you identify trends and make informed trading decisions. Continually educate yourself and adapt your strategies to the evolving market environment. So adaptation and increasing your knowledge is very crucial in order to help mitigate or control losses. As far as you grow in knowledge, as you increase in knowledge, there are certain trading decisions that you won't make again. Your strategy will be more refined, and you will be able to understand several factors and know when to trade and when not to trade. Then number 6, seeking mentorship and learning from others. There are several people who are not interested in learning from others or taking mentorship. I know some people's reason is inability to pay for mentorship. That's a different case. There are this term called self-taught is popular among forex traders, and I promise you it's not the best route to go if you want to become successful. It is a very long route. If you're willing to take it, fine, that's okay by you. But if you're unable to pay for mentorship, that's a different case entirely. But if you have the funds, but you have the funds to pay for mentorship and you choose to follow the trial and error route, you are doing yourself more harm than good. The money you will lose in that process will be more than the money you would have used to pay someone. Don't be afraid to seek guidance and mentorship from experienced traders or join trading communities. Engaging with like-minded individuals can provide valuable insights, alternative perspectives, and support during challenging times. Learn from the experiences of others, but always remember to develop your own trading style and adapt it to your unique circumstances. Number 7, building discipline and patience. We've said in previous videos, I think about 2 or 3 episodes under this series, that patience and discipline are very crucial to becoming a successful trader. You cannot become a successful trader without these two. So it's very crucial and it's very important that you are a disciplined trader and you are patient with your strategy. Discipline and patience are virtues that every successful trader must cultivate. Stick to your trading plan, avoid impulsive decisions based on emotions, and patiently wait for high probability setups. Losses often occur when traders deviate from their strategy or succumb to fear and greed. Developing discipline and patience will help you stay focused on your long-term goals and avoid unnecessary losses. So like we said, discipline is very necessary. It's what helps you stick to your trading plan. Many at times when a trader gets huge losses, it's usually because he deviated from his trading plan, he refused to be disciplined with his plan, or he decided to take a trade impulsively. So you don't want to do any of these things. You want to stay focused, disciplined, and patient, or patiently waiting for the right setup that best suits your trading strategy. In conclusion, experiencing trading losses is an inevitable part of forex trading journey. By adopting a resilient mindset, analyzing mistakes, implementing robust risk management strategies, adapting to market conditions, and continuously learning, you can turn setbacks into opportunities for growth and become a more successful trader. Remember, the path of success in trading is paved with losses. I know you don't want to hear that. And it is through learning from these losses that you will ultimately achieve long-term profitability. Stay persistent, focused, and committed to continuous improvement, and you will find that the lesson learned from losses will be your greatest asset in the pursuit of trading excellence. See you in the next video.